Hi there, this is Jerleigh Thompson with Texel Real Estate, and this morning we're going to be talking to Kyla Blassingame, the one and only in the entire country. She is going to tell us a little bit about loans that are rehab loans. Most people are not aware that actual mortgage lenders are out there. They can do rehab loans, so it's not a hard money loan. You go through them, it's a process, but she's going to tell us about the different kinds that are out there, what it offers, and how to qualify for those. Kyla, tell us a little bit about yourself.
Hello everyone. I've been in the industry for about 6 years. Just made a move to a company that actually does offer renovation loans, so that's huge. Most people don't realize that there's 3 different products out there that you can actually choose from, and I'm just excited to kind of get into that niche and see what's out there.
Very cool. So basically, you know, being in the investor world and working with a lot of investors, most of the time, what we see up here is a lot of hard money lenders, which is a great avenue. Private money is a great avenue. We're a big proponent of that, but it's nice to have options. And especially for some of the newer investors that are out there, that the moment that you say hard money, they kind of get scared. You know, that it's like points and the interest rate and all of that. So maybe just walk us through, like, what are the 3 products, and then we can just kind of go from one to one to one.
Just back on rates real quick, you know, hard money is going to be up your 11 to 12%. With these loans, it's a good 5.5 to maybe 6%, so you're not looking at a ton of points or, you know, paying back on the rates or anything like that. So it's they're great products that aren't hard money, like you were just saying. So there's 3 different types. There's 2 FHA, which I'm sure everyone is familiar with, a 203k. What they don't know is that there's a standard and there's also a full consultant, or a limited, if you will, and full consultant. Okay. So there's 2 different FHA products, and then also there's a conventional product that's called Homestyle.
Okay.
And so a lot of people are not familiar with the Homestyle because it just throws out 203k, and that's your huge renovation, and that's all you got. That's
I had
not
never,
true.
until we spoke recently, I had never heard of the conventional.
Right.
I had heard of the 203k and have worked with a couple of those, but I had never even heard of the conventional and that it was out there.
Right, and you know, people call in and say, I want a 203k loan. Okay, great, but when we actually get talking and the nitty gritty, the Homestyle actually makes more sense for them, and they had no idea that that was even a possibility.
Yep.
Especially for investors that want a conventional financing loan.
Yep.
You can do that, and you know, if you put down a 20% or whatever you do as an investor, then you're not having mortgage insurance, regardless of it's a 203k, you would have to.
Yep.
So Homestyle, that's a really big benefit for investors that can put the 20% down and still not have to have mortgage insurance throughout the life of the loan.
Well, and what's cool about that as well is when you're up against other, you know, people trying to get a house. Right. I mean, I know as a listing agent, when I'm listing a house and I've got 15, you know, offers in front of me, typically, and unfortunately, because of some of the hurdles you have to go through with an FHA, or some of the limitations that that have to do with an FHA loan, then the conventional loans are going to get the most attention.
Well, and let's be honest, you know, as a seller, for whatever reason, it's only a 1.5% more down, but they're like, I want a conventional and that's it.
Yeah.
That's a hard stop. I'm not doing an FHA approval because they think you have bad credit or whatever it is. Yep. So if you can go conventional and have that as a pre-approval letter, a lot of sellers will say, okay, we can look at that more.
Yeah.
You know, which is kind of silly, but it is what it is.
It is what it is. I mean, and then it's also, you know, I mean, when you're talking about a house that needs work and it's an FHA, then a lot of people are concerned of, is this going to pass the inspection? When the appraiser goes out there, if he says all of this stuff needs to be done and they didn't do a 203k, then it puts the brakes on everything. So that's kind of that's the backstory on that.
Yeah, and you know, speaking of appraisals though, we know going in that it's not going to appraise. And that's fine. That's the whole point of these products is that you go in and the seller says, you know what, I'm not fixing one thing in this house. I'm going to sell it as it is. I just want to dump it off. Yeah. Well, it's never going to pass the appraisal. And we know that. Yeah. That's the whole point, is saying, great, what is the subject to? What are the absolute mandates? And then you add on your cosmetics. Gotcha. So I want a new kitchen. I want the driveway done. But we know for a fact that it's not going to pass that appraisal process. Gotcha. And so that's the whole point of the product, right, is to get past that.
Well then, how about we just dive into what is, like, the 203k. Let's talk about the 2 FHA ones first, and then we'll get to the to the glossy, the glossy pretty one.
Yeah, absolutely. So the 203k Streamline, and each one of these products offers something maybe just a little bit different to fit the needs of whatever's the scope of work, basically. So you're always going to focus on what is your scope of work. Do you want to do cosmetic only? Do you want to do structural? Do you want to do non? Do you want to do outbuildings? I mean, there's so many options with these products. But the 203k, the Streamline, obviously on FHA in every state, it has to be owner occupied, and that's another thing for investors. You could do a second home on Homestyle. FHA products have to be owner financed. So maximum amount of repairs on the Streamline is $35,000.
Okay.
So you cannot cap that on a Streamline. If you go full consultant, there's no limit.
Okay.
You can go over 35. You can't go a minimum of 5 on a full consultant. So
Okay.
there's that. If you only want $10,000, you're probably going to do the Streamline. It doesn't have a consultant. You can kind of do it on your own and kind of move on. If you're looking at a huge project, 50,000 to 60, you're going to do the full consultant.
Okay.
On FHA.
Real quick, we have a question about 203k. Question mark. What is that? Why do they call it a 203k? I mean, is that all these products are under the 203k? Like that's what they're called, and then they have their separate names?
Yes. So if you have, like say in Houston right now, there's hurricane relief. So that's a 203H. You have a 203B. You have a 203K. It's just the standard for Fannie Mae, Freddie Mac, whatever to call. That's just the name of the product. It's 203K.
Yeah. That's the category that
it fits in.
Okay.
Yeah, 203H would be hurricane relief. And stuff like that. So that's just the name of the product.
Okay.
Yeah.
All right. Just a little definition right there.
Yes.
And morning, everybody. We've got Trenton and Lacey. Who else? Some of my comments disappeared. So, hi, good morning. Anyway, so 203K, and then the 2 FHAs is you've got the Streamline and
the full consultant.
And the full consultant.
Right. So the big difference on Streamline and full consultant is Streamline, you cannot do any structural repairs.
Okay.
So you cannot tear down a load-bearing wall. You can't do anything like that. Both do cosmetics. So if you want kitchen appliances, you want microwave, you want all that, that is included in that.
Okay.
The full consultant, you can do structural. You can tear down a load-bearing wall. And cool thing with full consultant is you can, as long as you have a foundation, you can literally tear down the whole building and start fresh without being a construction loan.
Got it.
It's still a renovation. You will still close before construction starts and then be able to complete the project.
Got it. So and then when you say it cannot be structural, so does that also, on the Streamline, does that also include like roof and things like that? I mean, is it when you're tearing out anything?
When you're talking about Streamline, you're talking about your cosmetic things. I want a new kitchen. I want to redo my office. If you're talking about anything with roofing or pier and beam or any foundation work, anything like that, you're going to go to full consultant on that.
Okay.
On the FHA, right.
And the FHA, just to be clear, that one is one that has to be owner occupied. So you
correct, because it's a government loan, so it has to be owner occupied. You can't have a second home FHA or an investment FHA property.
Okay. So if you get the construction done and you're in that property, let's say we have an investor who decides, okay, can they live in that property? And it's still, everything still be legal if they live in that property. That's their
as long as they're claiming it as primary residence.
Like, how is there a limit as far as how long they have to keep the property?
6 months, just like you would do a refinance at that time. You could refinance out of it. Maybe a little sticky. I would probably wait 7 or 8 months.
Gotcha.
But technically, it's 6 months.
Okay.
If you wanted to do a year, then you're completely within compliance, and it's easy breezy, no problem.
Gotcha.
Right.
Okay.
But yes, you have to say it's your primary residence at the time.
Got it. Even though if you're doing all the construction, structural and everything, then you're probably not living in that property at the time.
Right.
Okay.
Yeah,
but you're claiming it.
Absolutely. That's what I'm saying. So you could be leasing or you could be living in a different property, but your intent to occupy is going to be your primary. Then once everything's said and done, then you move in, and that's 6 months process about.
Gotcha. Okay.
So yeah.
So that's interesting as far as, like I said, I know a lot of realtor friends of mine and brokers. We're all pretty familiar with the FHA 203k. If we haven't done one ourselves, then we know someone who has, or we've gone to one of the classes or seminars. And it's interesting to know the difference. But now, the juicy part is that now there's a conventional one out there.
Correct.
So that's really interesting.
Yes.
So what's the difference between if I said, okay, I'm going to do the FHA, 203k versus the conventional?
Well, really important for investors that you can do it. You can get a second home. You can say, I want this as my investment property. Perfect. And you can still get a renovation loan with, you're still going to do your 10, 15, 20% down, but it's a conventional product. And again, you're not paying mortgage insurance on that investment property because you now have the equity in it, and you're not paying for an FHA product. And also the really cool thing about Homestyle is that, again, there's no limit to what you can do.
Got it.
There's, like on the Streamline, 35,000, whatever. Homestyle, there's no limit. Let's just say, for example, you have a house that's after improved value of $200,000. Your repairs can go up to $100,000, 50% of the after improved value.
Gotcha.
And just to talk about that real quick, so what we look at as far as loan amount is going to be your purchase price. So let's say you purchase a foreclosure for $80,000, okay?
Okay.
Then you add on $80,000 for repairs. So your loan amount will now be $160,000. So you're going to put down your 3%, your 3.5%, your 5% on the 160. You're not putting down on the 80,000 what you're purchasing.
Gotcha.
Because we finance it and we close it just like any normal loan in about 27 to 30 days.
Okay.
So all the financing is already included, and then you start your project.
Got it.
So you're not having to wait for money to come in, the draws to come in before you close and finalize and are financed on this loan.
Okay.
So, I mean, just to kind of throw that out there, because a lot of people say, well, I'm buying it for $80,000. Why do I have to put 5% down, 160?
Yeah.
Because your repairs are financed in. That's the whole point. So
The whole point of the loan. Okay,
Right.
so when you say 3.5% to 5% to 10%, obviously most of the investors out there watching they know that they're going to have to put a substantial down payment if they're doing hard money or something like that. Is it possible to get that conventional loan, that Homestyle loan, with just 3.5%? Or what's the minimum down payment on something like that?
Well, the cool thing that they just came out with is a program called Home Possible.
Okay.
And of course, you have to do owner occupied because you can't do less than your 10, 15, 20 second investment. We're talking about primary homes right now. Home Possible actually is a conventional product that allows you to put 3% down, and they actually work in conjunction with a Homestyle. So you find a property, doesn't matter, you go, I want a conventional product because eventually I'm going to have the equity, which you should instantly with the Rehab. I want to put 3% down minimum.
Gotcha.
I'm going to go conventional so that my PMI will drop off, not the life of the loan. And then you can also rehab the property
Okay.
at the same time.
So you're basically going in and just doing like a regular conventional loan, 3.5%, although 3.5% is really low for a conventional loan.
Right, you can't do 3.5 conventional, it'd be 3.
Oh, okay.
FHA is 3.5, conventional is typically 5.
Yep.
Right? But this product allows for a 3% conventional, and it's called Home Possible.
Okay. So what are the restrictions? Is there a income limit on that one, or?
The cool thing is DFW area, there's not.
Oh, okay.
If you went to Colorado, there would be.
Okay.
For whatever reason, in DFW, they said, you know what, screw it.
Yeah.
We just want the product, we're going to promote it, let's get it done. So there's not an income limit, which is actually really cool because I've lost a lot of deals with $5,000 over on income.
Yep.
And I'm like, we can't do the deal now.
Well, you and I have done some of the first-time home buyer
Right.
loans like that, and yeah.
Yeah,
all
there's
of a
no
sudden,
limitation on that.
They get married, and and their income increases, and the deal is dead.
Then there's that, yes.
Yeah, then there's that. Okay, so, well, that's really interesting that you could actually get into the house if you were willing, and I'm assuming that it's kind of the same guidelines as what we were talking about a minute ago, where you have to be in the property for a certain amount of time
Right.
before you can turn around and sell it.
Right, but yes, but with any of these products, you're going to get approved the way that you would get approved for any loan.
Gotcha.
It's basically a piggyback to getting approved.
Got it.
So you have to be approved for FHA, you have to be approved for conventional to be able to take advantage of the renovation loan.
Got it.
It's not a completely separate approval process. It's a piggyback onto it. So
Yeah.
I got approved for FHA, and so we're talking DTI, we're talking LTV, we're talking credit restrictions. Every restriction that is standard FHA or conventional is what you're going to be approved for.
And when you say, I'm just interrupting you because there
Yeah.
are a lot of people out there that don't realize, some of the acronyms that we use on a regular basis.
Understood.
So DTI and LTV You want to?
Yeah, so DTI is debt to income ratio. So we look at your gross income, not your net, which is great. And then we apply that and say, how much are your debts per month? So we're not looking at your gas, your groceries. We're looking at just what is reported on your credit report.
Gotcha.
So, and then also your new housing expense.
Yes.
So all of that combined, and typically you need to be on a conventional at about 45%. They've actually upped that to 50.
Okay.
And Home Possible, you can go up to 50% as well. FHA, you can go up to 55% debt to income.
Got it.
Which is a lot. That's
is.
55% of your income. That's gross, not net. So I don't really advise first-time home buyers or investors to really go up to that mark.
Yeah.
Because you're really kind of married to your house.
Yeah.
And, you know, I don't really like to do that to people.
Yeah.
So here's 50% of your income that we're actually grossing up.
Yeah.
So yeah, I don't like to do that.
Gotcha.
But you can.
Gotcha. So that's debt to income, and then LTV.
Is loan to value. So your loan to value, so let's say you buy a house for $200,000 and your loan is $100,000. You're 50%. That's great. You can go up to 97.7 FHA,
Wow. Oh yeah, 97.7.
95 on conventional.
Got it.
And what's great about the renovation products is it's a refinance. You're not capped at 80% on conventional. You can go up to the higher because it's a refi.
Got it.
Even if it's a purchase, obviously you can put the 3%, 5%, whatever. But if you are in your house right now and you're like, you know what, I want a new bathroom. Great, I'm going to go over my 80%. That's fine because you're not doing a cash out. You're
Got
doing
it.
a refinance to add value
Value to the home.
Right. So you'll pay mortgage insurance for a little bit, but if it's 83%, you're looking at 83% loan to value. Then your mortgage insurance drops dramatically to 12% coverage as opposed to 30%.
Got it.
So it's menial, like $53 a month to get your whole new bathroom.
Nice.
You know, so that's great.
Nice. I need a new bathroom. Okay, so that being said, now I know you mentioned to me before that you can also just, let's say I decide to do this. Let's say I'm living in the property and I decide to do this, and I want to build a mother-in-law suite or something like that, or a pool house or anything like
Right.
that. Does it cover that?
The only product out of the three that does is the 203k full consultant.
Okay.
The Homestyle does not, nor does the Streamline.
All right.
So, you know, it's cool that there's three products available because that's a specific situation.
Exactly.
And maybe it doesn't fit with this, but there's going to be a product out there that it will fit in.
Gotcha.
Again, foundation work, if you have it in place, the full consultant, you can tear down the whole building. If you only want a little bit, then you're going to go less with the cosmetic. If you want a full-on conventional renovation, let's go $150,000, that's going to be your Homestyle.
Got it.
So again, there's different products for what your scope of work is basically going to dictate which program you're going to get into.
Gotcha.
And you know, if you have to scale back on some of the renovations because of loan to value or debt to income issues, that's not a problem. We do that in the process.
Okay.
So it's not set numbers up front that we have to abide by and all of a sudden it's going to fall out. There's lots of wiggle room to work with.
Good to know.
Yeah.
Okay, well then let's get to basically how when somebody's getting approved for one of these loans, I know you touched on it just a second ago, but when somebody's getting approved for one of these loans, what's the process? Are they all basically the same? It's the same as any other loan?
I mean, there's a few differences, obviously, because it's going to be it's a piggyback on what we're doing. It's going to be your standard approval, though, bank statements, W-2s, you know, just the very basic income qualifications to make sure that you qualify for the loan.
Got it.
On top of that, what you're going to do is you're going to find a consultant to get you bids or your scope of work. And it could be very basic at the beginning. I just want to kind of see, they told me, my friend Joe told me it's probably going to be $30,000. I have a pretty basic scope of work. Great, we can work with that to set the file up for approval.
Yep.
When it comes down to the nitty gritty, what is also great about this company and these products is that we have a full renovation team that is dedicated to nothing but renovation loans.
Okay.
So I'm not going to be talking to the contractors because that's not my forte. I'm going to be the lender and I'm going to...
You're doing the loan.
I'm doing the loan.
Yeah.
You're not going to... The borrowers are not going to have to talk to the consultant the whole time because they don't know the vernacular. It's you're going out there blind. If you have no idea what you're doing, then you don't even know how to talk to the contractors. So our team will get the bids, talk to the contractors, make sure all of that is in place for the scope of work so that we can get started.
Gotcha.
So you're not going to go and go, hey, Mr. Contractor, I have no idea what I'm doing, help.
Yeah.
We're going to hold your hand, we're going to go through the process, and we're going to be your liaison so that you're not stressed out, you have no idea what you're doing, because we're going to take care of that.
Gotcha.
So it's
and that
awesome.
right there, I mean, that's huge in the
Right.
fact, I mean, anybody who is new at it, you can either hire a company that GCs the whole thing and
Right.
they're known for that sort of thing, or you're winging it and there's probably going to be some mistakes had.
Or if you are old hat, but you
Yeah.
don't want to deal with it,
or that.
then fantastic, y'all take care of it.
Yeah.
Then I can say, I don't think that's right, or whatever, and,
Yeah.
and chime in, but it's off your plate.
Yeah.
You don't have to mess with it.
So y'all have, so basically that part of your team has contractors that y'all have worked with over a period of time, or?
Yeah, we do. We cannot say, I need you to work with this contractor,
Yeah.
clearly. But we do have ratings and how many projects we've done with them together, what our percentage rate is, and and all that. But we'll give you a list. But you can use whichever contractor you want as long as there's not a relationship.
Okay, like
So
my dad does
your
such and
dad,
such.
even if he's licensed, your dad can't do it just because it's compliance and you just
Yeah.
can't. But if you have a contractor that you've used on houses before, if you've invested and done it before, fantastic. Shoot them over our contact or vice versa, and we'll get a hold of them and we'll go from there.
Gotcha.
So if you have someone that you absolutely love that's done your house before, great. We are not limited to which contractor we use. That is up to you entirely.
Okay. So let's say here I am, I've got my property, I'm renovating the property, and I'm talking to y'all, I'm going to the job site, I'm
Right.
checking on everything, but once the job's completed, let's say the flooring just got done. So do they just contact the liaison at your mortgage company and then they
Right.
cut them the check, or is this, how does
So-
that whole process work?
The draws are different for each product. Sometimes it's 50% up front, sometimes it's 3 or 4 draws, sometimes it's at the end.
Gotcha.
It just depends on the product. Again, that changes per product. So I can't tell you without talking to you and knowing your scope of work exactly what you're going to be facing at that point. But the scope of work that you want, we will not, we monitor the whole thing from start to finish.
Okay.
We will never say, okay, we're out of it, the process, good luck.
Yeah.
Ever. They have to send us pictures, there's people that go out and inspect, there's draws, there's the complete amount of completion is 6 months max.
Okay.
You cannot go over 6 months. So it's not going to be a project that
Drags out
drags
forever.
out. You can't get a hold of the consultant.
year
you
later.
can't, well, they told me they were going to do this, and all of a sudden my roof's fucked. You know what I mean? Like you can't.
Yeah.
No.
Yeah.
It's going to be absolutely monitored the whole time.
Okay.
So there's
Real
none
quick,
of that.
all right, Ryan Harper. I'm an investor. How can I hack the system? What, really? Are there any loopholes that I can use in my business to really take advantage of what's out there?
Let's have a phone conversation and not do anything in writing.
Okay, Fennell, I hope I'm saying that correctly, Hayes. What company is she referring to? So your company again?
Yeah, Cardinal Financial.
Okay. Cardinal Financial.
We're based out of, it's Addison, but our address is Dallas. That's our corporate. We were wholesale for a very long time, and we just got into retail about November of this year.
Okay.
Or, I mean, of last year, sorry.
Very cool.
So that's why they kind of hopped on all the products available. I mean, and again, we're not just a renovation company. It's FHA, 203k, I mean, VA, USDA, conventional, jumbo. I mean, we do the whole gamut. We're just talking today about the renovation.
These products, because these products are really unique to a lot of our viewers out there that are, I mean, it's a great niche for investors. As far as less out of pocket, a lot less risk, somebody kind of holding your hand and guiding you through the process if you don't have that mentor type or somebody out there that you can reach out to.
100%, right. And if there's any questions, our renovation can handle it. They know the question, they see it all the questions. Me, I'm gonna say, I'm not gonna lie to you. Let's get you to the renovation department because that's not my forte. I understand the products and how to finance them. But as far as you're asking if you can do this wall as opposed to this, that's not gonna be me.
Yeah.
But you have a whole team dedicated to nothing but answering those questions.
Gotcha.
So.
Well, which is helpful. I've seen too many clients get out there and they kind of get submerged in it, and then they get overwhelmed because it's really easy to get overwhelmed with all of those projects and how do I handle it and all of the problems that come along with a project. Because the moment you open up a wall, there could be 15 different things that come out of that. So
Right, and then that goes into play about the contingencies.
Okay.
So contingency, you can waive that if you want. Don't recommend it. 10% contingency if the utilities are working. 15% if there's no working utilities.
Okay.
So that if the problems like that arise, you're already covered. You're taken care of. It's already financed in. You're good to go.
Okay.
That's not going to be your out of pocket. That's your oh crap, what happened? Funds.
Okay, so that's already financed in. When you say it's already financed in, like the 10% and the 15%, that means that if we close on a property and it does have utilities, but then it ends up having some sort of utility issue, does that mean 10% of what I got approved for is being reserved for that?
Correct.
And we're only spending, so everything else is available for all the other
Exactly.
stuff that and what if it goes over the 10%? Like, what if it ends up being oh crud, this is big?
Well, unfortunately, you're a little SOL because the contingency is capped, and that's what you got.
Okay.
So if you want to be safe, you can do a 20% contingency, and that's going to go back to you as a principal reduction because you can never get cash back on a renovation loan.
Got it.
It's not like an escrow holdback where you can do $5,000 towards anything. No, there's zero cash back. It either goes down towards your down payment, or it's a principal reduction.
Okay.
So just keep that in mind. So you don't want to overdo the contingency because then what's the point if you don't need it? But you can throw in more, and we could adjust to finance that back in as well.
Okay.
So if it does go over, that's fine. You're not paying that out of pocket still.
Okay.
The only thing that you're paying out of pocket with these products as well is going to be the appraisal. So and that's another thing about the Homestyle, which is pretty cool, because on an FHA, if you're refinancing an FHA, you're going to have 2 appraisals. And that could be kind of pricey. $500 to, that's $1,000 just on appraisals.
Yep.
Who knows if that's going to work. On Homestyle, you only have 1 appraisal and that's it and you're done. Maybe a final inspection, $150, but you're not going to have 2 full-on appraisals.
And so something else that we discussed that kind of speaks to a lot of the realtors out there is, I know a lot of us start to worry, oh crud, is it going to appraise? Well, what if it doesn't appraise, especially in this market because things have escalated so quickly and then you get that low appraisal in there. And now we're talking about a property that needs work. And I've done a ton of conventional loans where they know that that this is going to be an issue, and then we get close to closing, and they're like, "Oh, it didn't appraise." And I'm like, "Well, of course it didn't. There's these things. That's why they're going this route and buying it this way because anyway." So I'm sure you've heard it several times.
The biggest part though is sellers. I would like for them to be involved in these products so that they know and they're not scared and they're not shying people away because it's never going to appraise. Let's lower the value. Let's just get crazy.
Yeah.
It's like stop. You don't have to. There's products available for buyers to get this property as well.
If I just want to sell it as is and I don't want to touch it,
But to be able to talk to the buyers that walk in and say there are options.
Yeah.
Talk to your lender. But to be educated on that's huge to get the house sold, or to be able to buy the home. Like, okay, well we have options. We can do this as well.
Gotcha.
It doesn't have to be just standard financing.
And so as far as the appraisal goes, then y'all are all prepared for that's the essence of the product.
We never expect an appraisal to come back as is. That's the whole point of this renovation product. So don't get freaked out when it comes back subject to
all of these things being
$15,000 in repairs.
Yeah.
Of course it is. We've already got the bids, we already have the specs, we already have the scope of work. We already know that's going to be an issue. So it's never going to appraise.
Yeah.
That's the whole point.
Yeah.
And that's fine.
And so
we're prepared
it comes
for that.
back, the appraisal comes back, you're taking a look at it, and we all know it didn't appraise, and your team goes, oh, that's okay, we have all this built in, we're still closing on the 5th.
And even if you don't go in saying, I want a renovation loan, but you go to a house and you absolutely love it, and you're like, it didn't appraise. It's subject to $20,000. Great, we'll just flip you into this product because again, you're already approved. financially.
Ah,
so
and
then we'll
so
just
now
throw
we're
you
just-
into it
yeah.
for $10,000, whatever you need, and just kind of flip that over so you can still get that dream home or whatever home you're looking at. So you don't have to completely waste money on the appraisal and just throw up your hands and be done with it. So you can add that on after the fact. You don't even know that you're doing that product until it pops up.
Okay, well then here's a question. As far as, let's say the appraisal comes in, and you know how sometimes these appraisals, everybody's been familiar with these appraisals, are taking a minute, and we're waiting on them, and we're 5 days till closing, and it finally comes in and it didn't appraise.
Right.
So, and that's on just a regular home buyer. If we decided to flip this over and turn it into one of these
Renovation.
loans, one of these renovation loans, then how long does that, I mean,
Yeah. So the biggest hiccup with any of these loans is getting the bids from the contractors.
okay.
If you
Yep.
if you know the contractor and y'all are in cahoots, y'all are great, that's probably going to go a
Speed up
little
the
faster.
process.
But it's up to you guys for the scope of work to get the contractors on board. We can't move until we have a project in hand. So, but as soon as we do, you're already approved. All we're waiting on is that appraisal. You're looking at a week and a half, 2 weeks
Okay.
past, but that's contingent upon the contractor bids, and that's
Okay.
the biggest hiccup. But again, we work with them to kind of put some pressure
Speed
on
it,
them and say,
yeah.
hey, we're still
kinda
waiting on
need
this.
this.
We're already done. We're already done with the process.
Yeah.
Now we just need
Let's go.
these documents. Yeah. So we'll kind of push on
really,
that as well.
Then what could happen is, here we are, 5 days till closing, appraisal doesn't come in. If we flip them over to one of these renovation loans, then as long as we could get those bids fairly quickly, then it's as soon as we get those bids, then, I mean,
Yeah,
we
then,
could
then
probably
it's going to be the
close-
subject to, and it's going to be, yeah, as soon as we get all the bids in and we can restructure the file, you're already through underwriting. You're already approved. We're kind of good to go. But yeah, I mean, really the biggest hiccup is the contractors.
Okay.
So, but you're not going to be another month out.
Yep.
And if that's the case, the sellers probably know something's up. So they can't be really too pissy about you extending a contract because they don't want to put it back on the market.
It's gonna take
And then
twice
this
as
is going to
long.
be on the house
Yep.
that this is what it is. So, I haven't run into a problem where the sellers are like, this is absolutely erroneous, this is ridiculous.
Yeah, I'm not
never
doing
knew,
this.
I never did this,
Yeah.
whatever. I've never run into that.
Yeah.
So it's a little backup, but it's nothing that's going to be 3 months or anything like that. No.
Okay, let's say they have a loan with somebody else. Can they piggyback with you, and you look at their, like, this lender has just thrown up their hands and they're like, there's nothing we can do because they don't carry this product. Do they have to, is it a complete start over with y'all, or can you
Unfortunately,
piggyback?
it is because
Okay.
it's going to be, the same thing with any other company. I have to pull your credit
Yep.
from my system. We have
Yep.
to go through our underwriters. But if you're already approved somewhere,
Yep.
then we know you are. It's a little technicality to fill out some disclosures, send in your paperwork that you've already sent in, so that's not too much of a beat down. You just did it. But yeah, you do have to start fresh so that we have you in our system as that. Because
Got it.
we don't work with another company on the lending side.
Yeah.
But if they, I've had a lot of people come over. They were almost through, and they're like, "Oh, y'all don't offer renovation products."
Yeah.
Crap. Okay. But a lot of the lenders that I've worked with, they go, "We can't do anything. Let me help you out." So they'll send over all the docs. They're very amenable to help their borrowers. Also, they're not just going to say,
Well,
"I'm not
it's your
doing
na-
anything."
Yeah, it's your
Right.
name out there, and you
Right.
got almost to closing, and
Right.
then here we are.
So that's not really an issue as far as starting over. The process is pretty quick because, again, the lenders that they have, there's nothing they can do. It's not like they lost the deal because someone stole it. They're like, oh, crap, I can't do that. Let me help you out.
Yeah.
And so, that's
Well,
it's
you've
really
even
not
done that
an-
on some
yeah.
with me. So,
Yeah.
yeah. So Kelly, if you're watching, Kelly's a good friend of mine. She just had a client. This just happened. I think I told you about that. They got close to closing. It's an investor. It's a conventional loan. They knew it needed foundation work. They get 5 days to closing. The appraisal finally comes back, and it's subject to foundation being fixed. Well, that was never a part of the foundation's getting fixed after they close on it because she is flipping this property. That's like the whole process here. That's why they're selling it at a discount. That's,
Right, because they're not going to fix the foundation.
Yeah.
Right.
And so they were scrambling, going, "What the heck? What are we going to do?" And so
Because a lot of times you have to fix that foundation before, and you're like, that's not the point.
that's not the point. The point is I'm getting this property as is.
Discount it, and then I'll work on the rest on the back end. Yeah.
Once they're out.
Right.
So anyway, So maybe she can reach out to you, and
Yeah,
I
absolutely.
passed on your number.
And you know, if there's not a product available, we'll come up with something. If we can't close it, no one can type of deal, you know, because there are so many different products out there and so many options. So if any of those options don't fit, you got to go, because there's nothing that can be done.
Yeah.
You know, it's a type of deal. So, but yeah, absolutely reach out. I'd love to help, at least talk them through it.
Yeah,
And kind of see where we're sitting. Yeah. And that's another thing is, even if you are not ready for 6 months, still give me a call, because I'll talk you through it. We'll go through the process. We'll, you know, because this was kind of fast and brief, but I'll get into the nitty gritty about timing, what really is, you know, expectations, what the steps are and stuff like that as well. Even again, if you're a year out, if you're just kind of starting as an investor, you don't really know what's happening, I can absolutely help with that as well.
Well,
So,
and that's the nice thing about working with you, is that she has walked several of my clients through some processes.
we worked with a client for a year,
a year.
and I gave her away because I couldn't do the product, you know, so it is what it is. I get it.
Yeah. So, well, that's really informative. I'm so glad that we finally set this up and you were
Me as
able
well.
to. Yeah. If
good.
anybody has any questions, go ahead and let us know. I know we've answered a couple. Hi, Helen. How are you doing?
So Kathy wants to know, what areas are you in? All of Texas.
Okay. Now, you did mention Colorado as a reference, so y'all don't do anything outside?
Only because I'm individually not licensed in Colorado yet.
Okay.
I'm working on licenses, but right now it's Texas. If there's another loan officer there in Cardinal that is licensed in other states, absolutely.
Okay.
And I'll just refer it over, and that's the way that would work.
Good to know. Let's see here. I know you had a book. I'm going to try a random picker. If y'all want to make comments or anything like that, let me know you're out there, and then that way I can give away a book. What book was it that you wanted?
Well, my mentor actually told me about this book when I first started in the industry about 6 years ago, and it really kind of resonated with me because I'm the worst procrastinator ever, if I can.
Ditto.
And it's not even procrastination on small things. It was the big things that I didn't want to tackle.
Yeah,
Because I'll wait till tomorrow to kind of get to that.
Yeah.
It's called Eat That Frog by Brian Tracy. And it's 21 ways to kind of get over your procrastination. Because we're all hustlers. We all have big things that we have to get off our plates a day. The little things are easy. Responding to email, great. But I'm talking about the big problems that you go into a messy garage and you're like, where do I start? Eat That Frog is great because it just kind of gives you that starting point to say, just stop what you're doing, get it finished, because then the rest of your day is
just do it.
easy.
Yeah.
The rest of your day is like, oh my God, I did so much today.
Yeah.
I've solved one problem. Great, as opposed to it piling up, and it never gets done.
Well, the more you procrastinate those big things, I mean, that's...
and then
it
it's
gets
anxiety,
scarier.
and then
Yeah,
you're like,
yeah.
oh, I've gone too far to even
Yeah.
fix it at this point. I'm just not going to call them back ever, no.
I'm going to disappear.
Yeah. I lost my phone.
Yeah. I was in a car wreck.
Right. Go to the extreme. I moved to Alaska. I don't know what happened, but hey, I'm back now. I can tackle that problem. Got it.
Yeah.
So it's to eliminate all of that.
Yeah. Okay, let's see.
But it is a game changer when you tackle that one thing that you need to get done.
Yeah.
And then your rest of your days, you're like, I was so productive today. I did one big thing. Fantastic. I'm out.
Happy hour.
Drop
Wait,
the
it's
mic.
only noon?
I'm out of here.
Yeah.
So it's good.
All right, let me see if I can do this. Daniel and I messed with this for, I don't know, a good 10 minutes.
Was it only 10?
Well, it felt like 30, but I don't know. I wish somebody else could do this. That would be nice. Log in with, okay, I want to log in with Facebook. Allow once, I think.
Yeah, don't
Continue
you have
as
someone to help you
Jerleigh.
with this? Because it's not going to be me.
Yeah.
Because I have no idea.
Okay, here's the problem that I think I'm going to have is I have to log in as me, and I'm not on the Propelio manager. So I don't know if I can do that. Travion.
That's you, Travion.
So I'm trying it, but I think I have to be a Propelio.
Pick a random name.
Just pick a random name? All right, we're just gonna, yeah. Of course, then I just logged out of Facebook.
Give it to Ace. His name is Ace.
Ace.
Where are all my comments?
Let's see here. Oh, you got to do that drop down menu. You pick them. You're the guest.
Yeah, that's
Yeah.
right. Okay, where are all the damn comments?
Maybe do the here.
Just help me. Help me.
I don't know.
Oh
No.
God, you don't want to report it. Oh God. Oh, okay, what have we done? What have we done? His name was Ace, and he said Ace is taking all this in.
Ace is taking all that in?
Yeah.
Okay.
Like
well
he
then,
was excited about it, so.
okay. Well, then we're going to go with, do you see an ace on there, Travion?
Did you say Ace?
Yes.
Yeah.
Yeah.
Okay. Then she just picked ace.
Because
Sorry,
he said
we
he's
didn't-
soaking it all in. He's good.
Yeah.
I like that.
Yeah. So again, I'm Jerleigh Thompson with Texel Real Estate, your Texas broker for Propelio, and also a little plug for Propelio. If you're out there, you're looking for a resource to go to that helps you analyze your properties, gives you the lead list, the foreclosure, probates, all of that. We also launched websites. Go and check it out. There's a trial period, a free trial period if you'd like to check it out for free, propelio.com. And then I'm Texel Real Estate Brokerage, Jerleigh Thompson, and
Kyla Blassingame at Cardinal Financial.
awesome.
Yep.
Thanks, you guys.
Thanks, guys,
for
so
tuning
much.
in.
Appreciate it.
Bye.